And welcome back to Bitcoin Advisors channel. My name is Chris, bringing it to you here from Westlake Village, California. We got another gloomy, overcast Wednesday. It is Wednesday. It is hump day. We're halfway through the week and still debating that $1 million question. Are we going to hit 32,000 or 25,000 first? Let's go over the major economic data before we get in the charts here today. So core inflation, the core inflation rate came in at, gotta refresh my screen here. And this core CPI takes out food and energy. And remember, the Fed wants to be at 2%. Core inflation comes in at 5.6% month over month. In line with consensus, core inflation in line with the consensus at 5.6%. Now, the inflation year over year went down to 5%, and you had CPI March lower than expected. So overall seems to be a bit of a bullish print showing what the Fed is doing to bring inflation down is working slowly but surely. And I keep saying, you know what, I think the Fed fluffs these numbers every single time. The inflation rate month over month was lower than expected. And the year over year, again, I think that's the important one at 5.6%, still much higher than where Powell wants to be at 2%. So what do we have? The Fed rate tool, they are pricing in a 68.5% chance of another quarter basis point coming up on March 3rd. And I think that's in line with what Warren Buffett was talking about today. He said more banks will fail, but deposits will be safe, says Warren Buffett. So he says, quote, "We're not over the bank failures, but depositors haven't had a crisis," he said during the interview on CNBC. "Banks go bust, but depositors aren't going to be hurt." And what does that line up with? That lines up with the Fed printing QE to infinity. They're just going to print more money to save the day. And what does that end up doing? That causes higher inflation. So the Fed is fighting this balance between keeping inflation lower and crushing the entire banking sector and the stock market. Tomorrow, banks are going to report on earnings. But as we had a bit of a bullish print for the inflation side of things and the dollar is coming down, I would suspect this gooses the odds in the favor of the bulls, seeing that Bitcoin heads up to that 31,891 target. And personally, if I do think we get up to this band, we're probably going to go for a little bit more than that. So the question lies, well, where is the next major buying opportunity? And we've been talking about one. That's not what I wanted to do. We've been talking about two opportunities here. One today, later today, the Fed minutes are going to come out, and that usually does jostle the market a little bit more. Where did I see that today? Powell's going to talk today, right? April 12th. Maybe that was a unless it's already going on right now. I saw something to do with the Fed Powell speech. Now there's a 10-year, FOMC minutes come out in 2 hours and 15 minutes. Sometimes that can shock the market. But here's what I wanted to overall target heading up to this area at 31,891. But just by ticking below yesterday's low, I would suspect Bitcoin to come down to about 29,000 and kind of retest that 28.8 major level that we fought so hard to break through. We finally broke through, and volatility is still expanding. Momentum remains to the upside as long as we're above 29,037. So could we get a spike down to 29,000? I would look at that as a major buying opportunity and this as a major buying opportunity somewhere off the green 55, perhaps a little bit lower, somewhere in that region around 24 to 25,000. That will line up with our fib tool here as well. So the 0.5 coming in at 24,293 and the 382 coming in at 25,350, right below the green 55. However, volatility is now expanding, and typically that green 55 is going to be a good buy when volatility is low. So where's volatility right now? We're above 25 percentile, initiating that 20% move we've been talking about. How far have we gotten thus far on the daily volatility momentum? Only 8%. And we said that's likely to happen over the next 8 to 10 days. We're about 4 days into the move. And I think that is, I'm going to leave it off with that. So again, could we get a test down to 29,000 today? Perhaps, yes. The 4 hour does seem to be putting in a bit of a sell. We've got at least, let's see, no bearish divergence off that. So I am actually more in line that this does pick itself back up as we do not have the bearish divergence unless we come back from this high right here, this high. So that would be 1, 2, 3 drives. And I'm sorry, that does have 3 drives, giving us a target down to the green 55 over the next, I don't know, 5 or 6 candles. If we start to close back above 30,540 though, that would be invalidated, and I would expect this target to get hit sooner than later. What else is happening in the world of crypto here? Now, I did see this. We've been talking about FedNow coin being kind of the placebo for central bank digital currency, but the Fed has released a statement. It says, no, FedNow is not related to digital currency. FedNow is a payment service the Federal Reserve is making available for banks and credit unions to transfer funds. It's like other Federal Reserve payment services such as FedWire and FedACH. The FedNow service is neither a form of currency nor a step toward eliminating any form of payment, including cash. So they put it big and bold here. It says the Federal Reserve has made no decision on issuing central bank digital currency and would not do so without clear support from Congress and the executive branch, ideally in the form of specific authorizing law. A CBDC would not replace cash or other payment options. So, as you know, many governors, the Florida governor, and I think Wyoming and Texas, all moving to make it illegal for the Fed to launch a CBDC. So that's it for that update. Although I do think if there is a major crash, that's how they would usher in the CBDC as a new form of bailout. TED Talks Macro says, as expected, with the headline coming in slightly lower than forecast. So kind of a nothing burger. And speaking of nothing burgers, there was the Shanghai upgrade today for Ethereum, essentially unlocking all the Ethereum that was staked, and that seems to be a bit of a nothing burger. And we had been talking about Ethereum, probably the more undervalued of the two assets, and we're looking for a measure move on Ethereum up to about $2,400, somewhere in that area, 2,400 to 2,300. And I would say, you know, Ethereum starts to close anywhere over 1932 today. That rally will be in play, and the shorter term target is going to be right here at $2,010. And is that in line with this previous high right back here? Yep. So probably going to get a sell on the first pass there, but Ethereum looking healthy, up 1.5% today. So the rumor was everything on the Shanghai exchange that was being unstaked was going to be sold, but as very often happens, the actual contradictory move happens, and Ethereum lights up a big green candle on the 4 hour to start off the day here. So just be on the lookout for the Fed minutes coming out in about 2 hours, which could, you know, jolt the market a little bit more. But as long as the dollar is heading down to our overall target of 101.12, then I would suspect that Bitcoin and Ethereum have a little bit more room to grow. I did want to point out near up 5% today, and you would have a measure move off of this ascending triangle quite a bit higher from where we're at today. So near perhaps on a breakout and targeting a move way up here. At perhaps 264. So what else did we talk about wanting to see? The altcoins start to run. Well, Bitcoin needs to do the impossible. And what are we talking about? Is we need to avert the daily downtrend. As you can see, we've got clear lower lows and lower highs coming all the way through. So what would revert the daily downtrend? Well, you'd want to see a higher high and a higher low, something like that. That would initiate a bit more upside for Ethereum and the rest of the altcoin market. Additionally, we talked about Tether dominance needs to break this critical zone. It's holding on for dear life here. But as Tether dominance goes down, which does look like it's pretty close to breaking, let's see if that is kind of still the major line in the sand. Not going to happen in one shot, but we are getting back in the bearish control zone. Volatility is expanding on the daily. 5-day is down, extremely low volatility right now. So either we're curling up for a melt to the upside, or we are about to break down, and the higher term timeframes are going to rule the market. So if you waited for a 5-day closure below this level, I'd say that'd be a little bit more conservative, and that's coming in at 6.55%. So Tether dominance, Bitcoin dominance. Let's check out the Fear and Greed Index, as I believe people are being a little bit more greedy in the crypto space right now. Yep, we are in the greedy zone at 65. So points for the bulls there. And I want to check out open interest as well. This is all the leverage positions on the board right now. Open interest. And I got to sign in here. You know, open interest slightly coming down. So what we want to see is this pick back up for the rally to continue. We want to see, you know, typically when open interest is going up and price is going up, you want to see that pattern continue. And we're coming in at about 8.5 million. So on the high side right now, or $8 million or $8 billion dollars of open interest, or it says 9.429. I think that was the last high. So denoting past prior markets, whenever open interest has gotten up to, you know, around 9-10 billion, see this long consolidation. And that paired up when the trend reversed there, you had lower high, so lower low, lower high, and then a big, nice downswing. Bitcoin came down from 21,000 down to that 15.5. That was the last major drop off. So open interest is not as high as I would like to see it for neither a major rally or a major drawdown. So kind of another point for the bulls there. Trudging its road to happy destiny, that's sideways into the up. Remember, we are 12 months out from the halving, which typically the bull market starts there. So I do suspect we have one more shakeout, one more major drawdown. And again, you know, short-term buying opportunity, maybe at 29,000, but overall, after this 100% rally off the lows, you know, somewhere around the, at least the 0.5 over the next, you know, few months would be a nice kind of a macro buying opportunity on the weekly time frame. We just want to see this trend continue with higher highs and higher lows. And that's what I'll be keeping my eye out for. With that, guys, I'm going to leave you. I hope you have a blessed and highly favored day, and I will check back in with you tomorrow with some more updates on crypto. Take care.